Hey, good morning and welcome. Patriot Radio News Hour. I'm Joe Jaquint, CEO of the Patriot Trading Group, on our toll-free number, 800-951-0592. The website at allamericangold.com, and it is Hump Day Wednesday, and Jason will be back on Monday. You know, last week I had Joey, my son Joey, on, and he was telling you, warning you, call me. You need to get your 401ks rebalanced because the next leg down is coming. He was talking about this new higher interest rate environment. This little reprieve that we got over the summer is over. And Joey, since you've been on, just in 1 week's time, Wall Street's lost. The Dow's lost 2,000 points. The Nasdaq, the S&P, all of them are approaching the lows that we saw earlier this year. And as you said, the rate hike environment is here this morning. Goldman Sachs and B of A said now the Eurozone is going to raise 0.75 of a point. So now more than ever, people got to get their financial house in order.
Yeah, no, I completely agree. Like I said last week, things are going to get a little crazy, and it's just important to make one simple phone call and take 30 minutes of your time for us to meet and kind of just check in and just see how your 401k is allocated. Are we too aggressive right now? Are we too conservative right now? What's our time horizon? And then to include everything, what's our plan for retirement? You know, what do we want our dollars to do for us? And when times are like this, the market is down and things are looking bleak, it is the most important time to meet with someone, put a face to your money, and just have a conversation around, hey, what should we be doing now to set ourselves up for the future? Sadly spoke with some other people today, yesterday, and they have $400,000 in their 401k. Unfortunately, this year though, they've lost $250,000. And that's just due to being overly aggressive, making your dollars work too hard for you. There's a time and place for that, and I just want to make sure that we're all properly allocated in our 401ks to prevent any of that happening. The last thing you want to do is lose the money you worked your butt off for.
Yeah, and listen, the ever since the crash, the financial crisis, interest rates have been zero. I mean, the stock markets had been on a really big run. It kind of made sense to be aggressive, but now is the time that you need to shift because the rules have changed. What the Federal Reserve is trying to do has changed. Of course, this is the last day of August. Starting tomorrow, the Fed is going to be unloading tons of bonds, millions of dollars, billions of dollars in bonds are going to be coming off of their balance sheet. We're driving rates higher. That's going to put a lot of pressure on equities. But there's ways, and again, you're not saying, hey, you may not have, you're going to have some losses in a market like this, but there's no reason to be losing 20 and 30%, especially as we're getting ready for this next leg down. It just makes a lot of sense to protect that money.
Yeah, no, I think it's a simple no-brainer to come in and have a conversation about it. And like you said, yeah, maybe it was the right time to be aggressive a year ago, 2 years ago when the market was booming, but now it's time to dial it back. We need to wait for the bottom to happen. And once we have clarity that the market is going to go back up, then we can start to get a little more aggressive and reallocate our dollars. But for now, I think it's very important to be as conservative as possible. You look at bonds. That's the safe part of your portfolio. It's down 12% this year. Then you add on inflation of 10%. So now you're down 22% in all of the safe assets you have, and that's cash and bonds. So it's how do we make more safe money? How do we make sure we limit our losses and things like that? It's just very important to simply have that conversation. And then who knows, maybe 3 months, 4 months, 5 months, a year from now, we meet again and we reallocate this thing and go more aggressive and start collecting and reaping the rewards when the market starts to come back.
Yeah, and that's the whole thing, right, is let's have as much of that 401k money as possible for when it becomes time to get aggressive again, right? It doesn't help you if you sit there and you lose 20, 30, heaven forbid, because we don't know how far down this market's going to go. Heaven forbid you lose, 50, 60% of that 401k money when it comes back around again. Man, it sure would be better if you limited those losses and you had a lot more money to start with when it's time to get aggressive again.
No, exactly. And, for people that are aggressive now and looking to go conservative and dial it down, you're losing some money there, and it's tough. But unfortunately, we weren't positioned well. If you have someone, owning your investments or looking at them and they didn't contact you, that's a red flag. You should give me a call. I don't want to move your money anywhere. It's going to stay where it's at. We just need to make sure that you're properly allocated. You should always keep your 401k with your employer because they're going to match you. But what I do is I can help you look at that 401k. You send me a picture of it where it looks like, send me the account. We'll go over a Zoom meeting or a phone call, and I'll tell you exactly what's wrong with it and exactly what we should be doing to set ourselves up better for the future. Right now, these next couple of months, I don't see the market doing anything crazy. It's probably going to keep going down a little bit. So we're making sure we prepare ourselves for that. And once things start to get better, we'll start to slowly jack it up and hopefully, reap those rewards. It's impossible to time the market, but it is possible to prepare yourself for the market.
Hey, listen, we're going to be right back. We got one more segment with Joey. Don't touch that dial. This is important stuff. Saving that money so you can buy more gold and silver. Let's face it, that's what we got to do. We'll be right back. Welcome back here, Patriot Radio News Hour. Joe and Joey, my son, is with us today. He's over at Northwestern Mutual, and for a lot of people, it has been, really think about it, it's been, 14 years since we've seen a bear market? And what a lot of people don't realize is, hey, the bear market may not last that long. They're usually relatively quick. They last a year or two because, the Wall Street collapses and then they go into this money printing routine and all these things. But the amount of wealth lost in the bear markets and the amount of time it takes you to recover from them is substantial. Most people, it took them 10 years to recover from the last bear market because they were improperly allocated. And I get it. Listen, I used to work for the man. I had a 401k. Nobody calls you, right? You're lucky if maybe once a year your employer has a meeting, somebody shows up, hands you a packet or a folder with a bunch of leaflets and brochures, couple of pie charts and some graphs, and says, hey, you check a couple of boxes. And that's all you really get. It's time right now. Have Joey take a look at it for you. Some simple changes. We're talking about, hey, you're going to, instead of checking this box, you're going to say, hey, HR department, I'm switching my allocation of my 401k. I'm going to check this box, and that box. And Joey, that can save you, depending on how big your 401ks are, we could be talking hundreds of thousands of dollars.
No, that's exactly right. For some people, it's hundreds of thousands of dollars. Or for some people, it's tens of thousands of dollars. But really, you're saving 15% of your money, 10% of your money by just being properly allocated. I mean, right now, if you reap the rewards during COVID, that market was amazing. Everyone made money. Now it's kind of reality setting in. Things are dropping. And just when you think it's going to get better, it dropped again. Like you said, Dow has dropped 2,000 points since last week. Making sure we're trying to make that roller coaster as less as volatile as possible, putting it into more conservative assets. What we do here at Northwestern Mutual is we'll put a plan together and we'll get you exposed to all the different asset classes, whether it be small stocks, large cap stocks, commodities, real estate, emerging markets, things like that, making sure you're very diversified so that we're not riding this roller coaster. We're not taking that 25% hit. And then when things are looking better, things come back, we'll start to get a little more aggressive, crank it up a little bit, and reap the rewards. Biden's already printing out $10,000 for everyone that has student debt. There are things like that going on that we need to be aware of. It's increasing inflation. We're printing more money. It's not going to last forever. but in the next couple of months, we should start positioning ourselves and prepare for the market.
Now, let me ask you this. So you're going to help them. They've got to call you today, obviously, to get you involved in helping them get this set up right. But when it's time, and you say, okay, you know what, here we go, we need to reallocate again, you're going to actually reach out to them. They don't have to reach out to you again. You'll reach out to them.
Yeah, no, I'm going to reach out, and that's part of my job. That's what I do. I genuinely care. I will reach out to you. I'll shoot you some calls. I'll leave a voicemail. I'll leave a text. Just respond to me when you can. Or you can call me and text me whenever you want. You have questions. You're like, hey, Joe, what do you think about this? What do you think about that? Where do you think the market's going? Would love to have that conversation. We can always carve out time to speak and talk and have meetings. I will be the face to your money, and I will make sure that things are taken care of, and I will be 100% clear with you on everything that is going on. I think the biggest thing is that people are investing money, and they have no idea what their money is invested in. They have no idea who to talk to about their money, and they just, they spend all their day working. You go home, last thing you want to do is look at your 401k and look at your finances. Have someone help you, walk you through it. That's where I come in. That's the benefit I bring in, is I help provide clarity, put a face to your money, and help you talk it out. The market is the market. You're going to be down right now. If you're up right now, I don't know what you're invested in, but good for you. Kudos to you. Everyone is down in the market. It's just making sure, how do we stop the bleeding? How do we limit the bleeding? Then how do we patch that wound up for us to grow and make some money these next couple of months when the market starts to rebound?
How do people get a hold of you, Joey?
Just reach me at my cell, 602-909-9048. Again, that's 602-909-9048. I'm always a call or text away. If I happen to miss your call, I'll give you a call back as soon as possible. I'm probably in a client meeting, and then we'll set something up and have a conversation. The thing is, to get your 401k statement from your HR department, it's probably going to take a week or two. So it's important that we talk about it. I give you some instructions on what to do, and then we meet the following week and get this 401k situated.
Yeah, that's the other thing too, right? It's going to take a little bit. It's going to take a few weeks, depending on how fast your HR department moves for you. So time is of the essence here. And for those of you, and I know, hey, I couldn't remember Joey's number. Go out to the 1360 website, 1360khnc.com. Go to sponsors. You'll see all of our advertisers there. Joey's business card is there. Just click on his business card, and it'll open up, and got all kinds of information on how to get a hold of it. It's got his phone number, his email. It's got all that stuff, and make sure you listen. This is important stuff, because these are little things that end up being really, really the difference between, and depending on how old you are, right, this could be hundreds of thousands of dollars, and potentially, if you're younger, even millions of dollars that you lost in your 401ks that you didn't need to lose, simply because you didn't know any better, you weren't properly allocated, you didn't have resources. There's no resources there. Like I said, you're lucky if you get a meeting once a year and get handed a bunch of brochures with some pie charts on it. This is one of those opportunities to, like Joey said, have a face on your money and someone that's looking out for you, so you can allocate that, so you can listen. So you can retire better. I mean, at the end of the day, look how much more expensive it is and how much more money people are going to need to retire just from where we were a few years ago, Joey. All of a sudden, it's like, wait a minute, man, I need 20, 30, 40% more money to retire with how expensive things have gotten.
Yeah, it's absolutely crazy. The cost of living is just insane. I remember, tacos used to be, $6 for 3 or 4 tacos, and now it's $20 for 4 tacos. It's getting insane, and it's making sure that we're making good decisions now for the future. A lot of people like to procrastinate. They don't want to think about it. They want to push it to the side. That's just not the way to do it. We got to talk about it. We got to have those uncomfortable conversations. We got to see what's going on, and that way we can set you up for retirement. I know your retirement self in retirement will thank you for doing what you did 10 years ago and giving me a call and reallocating that 401k. And just like the cost of living is going up, you look at Social Security, that's going to be bye-bye soon. That's getting less and less and less. And I don't think $1,000 a month is going to do anything for anyone in retirement in these next couple of years. It's not going to afford you very much. You're not going to get very far. And I hear too many people telling me, hey, Joe, I'm just going to rely on Social Security for retirement. It might not be there for you. And if it is there, it's not going to be very big. So it's how do we do things today to set ourselves up for the future? You know, these conversations are super easy. I'm not asking hard questions. We're just going to talk things out and develop a philosophy together that we can agree on. And we're going to follow that philosophy, and we're going to do that. There's a lot of emotion going on right now. How do we be emotionally stable? How do we not sell when the market is low? How do we wait and sell when the market is high? And we implement those things through meeting together and developing a strategy and philosophy of how we want our money to work for us.
Yeah, and again, today, the Dow's down again today. Now that it looks like the Eurozone is going to be forced into much bigger rate hikes, obviously with what's going on with the Russian and Ukrainian war and sky-high energy prices all throughout Europe. They were thinking that, hey, you know, Europe's maybe not going to be that aggressive. And today that's just been blown out of the water because inflation is just to the point where, take Germany as an example. You can't even buy firewood in Germany right now. It's all gone. People are really having a hard time. In England now, businesses are taking pictures of their power bills, where they're paying $5,000 and $10,000 a month just to turn the lights on. So things are going to get interest rates are going to get a lot more aggressive from here, Joey. And as you know, that's not good for equities.
No, it's terrible for equities. It's they're inversely related. Interest rates go up, market goes down. It's just not good for us, and that's kind of where we come in. We help people think about the plan they have, and we also introduce them to other buckets of money. How do we get off this roller coaster of a market, and how do we get guaranteed income and guaranteed growth? And that's a conversation for us to have one-on-one and see if it's something that fits for you and something that we can put in place for you. It's all agent health sensitive. It's making sure we can apply for these things. How do we get some of our money out of the market to grow for us and serve as a hedge for us in retirement? Because God forbid you had to retire this year, you've already lost 20% of your retirement money. How do you set up a bucket of money to combat that, to where you don't need to spend down your investments during down years like this? There's a lot of different topics we can cover, and all these things, man, it takes years, it takes months to implement. We'll be meeting every 6 months. As we know, life is crazy. Things change fast, and I'm a big believer when things change, we should probably be changing with it too. We should probably be doing some different things, implementing new strategies to make sure that our money is doing what we want it to. Matter of fact is if you just let your money sit there in the market and you kind of don't touch it for 10 years, you know, you're going to get gains. But how do we make sure that in those 10 years we allocate properly to get us even more gains, preserve even more wealth, and gain even more capital to set us up for the retirement? Social Security is not going to be there. It's not going to be a big help. It's going to be on our backs to do the right things. So it's just having a simple conversation and thinking about it.
Yeah, the day of buy and hold, that's what the premise was. Hey, just keep putting it away and putting it away and putting it away. And people have found out because, there's people, they've been putting away in their 401k for 20 years. And they barely got $100,000 because they didn't allocate properly when the markets were bad, and it takes a long time to make those recoveries.
It takes years, man. 2008 happens. So people 4 years, 3 years, 6 years, even 10 years to recover. Then this happens. People lose another 30% of their retirement income. It's just making sure we're set up. The matter of fact is, 10 years ago, you were a lot younger. Now you're closer to retirement. to say you're on all equities at the age of 50 or 45 is absolutely insane. We need to make sure that things are allocated correctly. If you haven't touched your 401k in 10 years and it's got dust on it, let's take a look at it. Let's see where it's at, where it's going, and let's see if we're properly set up for today's market.
Joey, we're coming up on the break, and I know you got a meeting to get to really quickly again. Give out your contact information so people know how to get a hold of you.
Yeah, reach me on my personal cell. That's 602-909-9048. Again, 602-909-9048. If you forget that or couldn't write it down, you can always go to KHNC website, and my information is on there.
Joey, thanks for joining us again. We'll have Joey on in 2 or 3 weeks and see how things are progressing. Right now, the Dow's down another 100 points here. We had some jobs data out we're going to talk about. More bad news on the retail front. Layoffs from Snap and Bed, Bath, and Beyond. It may be beyond saving. I'll tell you all about that when we get back. 100-951-0592, Patriot Radio News Hour. Gold's down $2 right now. Silver is down about 25 cents. Yesterday, we had like $125 liberties. The price was insane at $550. We've got like 30 left. So we sold 90 of them yesterday. We got 30 of them left. So I'm holding the $550 price on the $5 liberties. I don't have a lot of $20 liberties, but I've got 40 of them. But it's all about price, right? That's really what we care about. I've got 40 $20 liberties, and those are going to be at $2,050. So you got two great options here. I mean, really great options. $20 gold, $2,050, $5 gold at $550 at 800-951-0592. The problem is I don't have a lot of them. I got $35 libs. I got 40 $20 libs. Snap today. Your Snap chatters out there laying off 20% of its workforce. It's about 1,400 people. Snap saying that revenue growth well below what was expected at the beginning of the year. And then Bed Bath and Beyond, one of those meme stocks today. 20% seems to be the theme. They're laying off 20% of its workforce, closing 150 stores. And Bed Bath & Beyond, I don't think that's going to be enough. I don't know that they make it through this. This is another thing that maybe next time we get Joey on, we'll talk about. A lot of these zombie-like companies that have been surviving over the last 15 plus years because they were able to borrow money cheaply. Now that's gone, right? They're not able to borrow that money. And of course, the money that they borrowed, they got to pay for it. Revenues are collapsing, Bed Bath & Beyond. So we had Best Buy yesterday. Today, Bed Bath & Beyond saying we're closing 150 stores. Retail has been a bright spot over the last couple of years because it makes sense, right? Everyone's getting checks. And that is starting. We're starting to see these cracks that we've been thinking were on the horizon. And then today, we had the Adp Jobs Report. So Friday, we're going to get another government jobs number. It came in well below expectations. I don't want to make too much out of it because they've been much lower than what the government has been saying for months now. But this one came in much lower, about less than half of what was expected. I think it was like 120. I'm trying to get the number up here. I want to say it was 123,000 jobs created in the month. And that, 132,000. A little dyslexia there. 132,000. They were looking for more like 300,000, but that really wasn't the important number. The important number out of ADP today is the wage inflation, labor inflation way hotter than expected. Wage inflation, 7.6% for people that stay. So these were people, hey, I didn't leave my job. I didn't quit my job and go to another company to get more money. Up 7.6%. That's huge. Huge. But here's what's even more shocking. People that left their job. 16.1% wage inflation. Those numbers just blew all of these expectations out of the water. And remember what I said last month when we got the government jobs number, which was much hotter than everyone thought. But I said that number doesn't really matter. Look at what they said about wages, and that number was super hot as well. And that just tells me, listen, rates are going much higher. Don't be surprised whatsoever. We're going to have a Fed funds rate of 4% before this year is out. I think, the New York Fed let it out like 6 weeks ago, and nobody believed them. They're saying, hey, by the summer of 2023, we could have a Fed funds rate of 6%. And again, that makes sense on the data I'm seeing. That makes sense on the data that I'm seeing, because it's one thing, listen, gas prices are nice. But here's the problem. Once you paid somebody 16% more, it's not like you can go back to them. Hey, you know what? The job crunch is cooled. We're going to reduce your pay by 20%. That doesn't happen. And this is what is the fundamental problem when dealing with idiots out there that don't understand how economics actually works. And this is a number today, like I said, it's hard to put into words what ADP came out and said today about, forget about the jobs number. Again, that was light. No doubt. That was a low number. It was really about how much it's costing employers to keep employees or to attract employees. This is something where when these things start playing out, and wait till they get their power bills this winter, this is going to be a very challenging market. Rates are going to go much higher than people thought just 6 weeks ago. And this is why you're seeing the market sell off, right? As Joey was talking about, hey, the Dow's down 2,000 points in a week. And the reason is because they're like, uh-oh, we were wrong. Shocker, we were wrong again. Because they thought, hey, the Fed maybe 3% and they would be done. I think they're going to be 3% in a couple weeks. I think that the next meeting, the Fed's raising 0.75 of a point. We're going to be at 3%. And now all of a sudden the realities are starting to set in. Uh-oh. Man, the way it looks right now, 4% may not be enough. I mean, we're talking 5%, 6%. How high can it go? And again, it's going to go until it crashes. I've been saying this from the beginning. I'm saying it to you now. The Fed has never been able to pull this off. It is an illusion. They are going to raise rates until it's broken. The amount of demand destruction that's needed, it's so far gone out of people's minds. They have no idea of what they're actually talking about. Look at crude oil. We had inventory numbers today. Stockpiles down again. Gas down 3 million barrels. Crude oil down 2 million barrels. Yeah, we need a lot more demand destruction. 800-951-0592. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. I know it's hard. Hey, why aren't gold and silver flying? Don't worry, they will. Take advantage. The 20s we have, and again, I'm not in Phoenix. I'm up in Colorado today. We had 40 of them at $2,050. Buy every single one of them. The $5 libs, I had 30 of them. $550. Buy everything you can afford. News out of the UK. Listen to this. I want you to understand what's happening. You think we live in a bubble here. We don't. And we are. It won't be as bad, but believe me, it's going to be bad. How about this? In Ireland, Poppy Fields Cafe. It's a cafe. Just got their power bill. $10,021 for 2 months of power. They said that their power bill has been skyrocketing, and now they have a VAT tax, a value-added tax on top of it. People are, listen, it's so funny. Twitter, Snapchat, TikTok are flooded with these videos. I got my electric bill today. How in the name of God is this possible? We're a small coffee shop. Their power bill, $10,000. And it just goes on and on and on. My mom owns a small cafe. Her electric bill was about $12,000 a year. Okay, so figure, $12,000, about $1,000 a month. Her new bill, $64,000 a year. She's working out her options, but she just said she thinks she's going to be forced to close. Arrived at work tonight to be told we may have to shut the shop. Last week's electric bill came in 10 times the amount from the previous month, from 900 pounds to 10,000 pounds. It's a small family-run business that's been open since 1982. Dorset Pub closed after a 58,000 pounds, so that's like $60,000 increase in utilities. The other day we said, hey, listen, in the UK, 70% of pubs may be forced to close. And you got to remember, all these, they have debt. Why does this matter? Hey, that's the UK. Yeah, I know, Double, you said our power bills are going to go up and all that stuff, but it's not going to go from $900 to $10,000. Right? It may go from $900 to $2,000, but it's not going to go to $10,000. Got to understand, we live in a debt-laden world. We live in a world where all of these banks are interwoven. Are you sitting there, you honestly believe 70% of the pubs and cafes and restaurants could close in the UK and that's not going to cause a tsunami? Think about what happened in the U.S. when like 8% of people stopped paying their mortgage. Think about what happened there. And again, I'm just talking about UK. I haven't even talked about Germany or Poland or France. You better be ready. There's two things you need to do. One, you need to call Joey, get that 401k reallocated. Two, you need to call Patriot and get that gold put away and make sure, I told you yesterday, do not have more than you should in your bank accounts. Don't do it. Don't be that person. The rules are different. Dodd-Frank solidified that. Right? It's a bail-in this time. What does bail-in mean? Well, it means that the depositors need to pay. So think about what we've learned through the Freedom of Information Act. What we learned is, hey, we spent a whole lot more than $720 billion bailing out the banks. The Fed spent a whole lot more than the $1.9 trillion they told us about. Come to find out, they spent about $17 trillion. Now that was, listen, the debt was only about $10 trillion. It is $40 trillion now. The derivatives on the bank's balance sheet have risen significantly since then. So I'm just doing some math. I'm thinking, man, the bailout this time's got to be even bigger. We got about $19 trillion in deposits. The money's got to come from somewhere, but I'm just saying, listen, go check it out. It's incredible. There's post after post after post after post. We've gone from $1,200 a month to $5,000 a month, and it's business after business after business. These are enormous expenses, and we know, listen, you're small business owners out there. Hey, there's not big margins out there. You can't take hits of all of a sudden, hey, my power bill just went up 100%, but they're not talking 100%, they're talking 1,000%, 500%. Think about what ADP said today. Wage inflation, 7.6% if you stayed, 16% if you leave. Here's the problem with that. And everybody knows, you're a small business owner. You can't bring in a new person that does the same job as a couple of other people that have been working for you for years and pay that person more. Right? Once your old employees find out, what's going to happen? Oh, you know what's going to happen. Yeah. 800-951-0592. Patriot Radio News Hour. Final segment coming up. 800-951-0592. I just got an email. Good news. We'll be able to double the amount of 5, so 65s. So we were able to find a few more. There's a few more 20s out there as well. Not that many, but put it away. $20 gold, $20.50. $5 gold, $550. If you're brand new, it's so easy. Just call the girls. Listen, that staff down in Phoenix, Arlene, Connie, Brittany, you are going to be treated like the kings and queens that you are. Just call them up. Just tell them, I want the special. They'll say, hey, which one do you want today? And you may say, I want the 5 libs, or I want the 20s. I want both. The only real hard question we ask is, well, how many would you like? I mean, that's it. No bait and switch. We don't play games with you. We actually want you to buy the stuff that we put on the air, and you can pay for it by check, bank wire. We take all the credit cards, Visa, MasterCard, Amex, Discover. We do charge 2% for credit cards, which is fair. I mean, come on, think about it. All these credit cards are all points now anyway. They're 4% in fees. You pay half. I'll pay the other half. 800-951-0592. If you're in Colorado or Arizona, you can pick up in our offices. Anybody else, we ship. We ship primarily FedEx, and it's a flat $35 to ship. You order $100,000, it's $35. You order $10,000, it's $35, and we ship primarily FedEx. These tweets just keep rolling in. This is just terrible. You're seeing bosses and employees in tears as they're all apparently power bills come out this time of year in the UK. Telford Chippy's boss in tears. $5,000 monthly gas bill and electric bill forcing him to close. And again, like I said, don't forget this. Don't forget this. All of these companies have debts. These debts are obviously not going to be paid, and this cascade effect starts happening. And it's one thing, listen, banks aren't set up to have 10%, 20%, 50%. They're saying 70% of people to stop paying their bills. That's not how it works. They're set up, hey, they're prepared for 1%, maybe 2%. And a really good bank, maybe 3%. That's about it. Because you got to remember, I mean, they're loaning out like 94 cents of every dollar you put into deposit. So you can understand real quickly, hey, they can't absorb these kinds of things, which is why you're going to see Wall Street on its back foot, especially now that it looks pretty clear here that us, the Eurozone, the UK, all of them are going to be raising rates very, very aggressively. And not to mention, listen, China's a really good indicator, right? Their manufacturing is being decimated, which just tells you what? the supply and demand. The demand isn't there. We heard from Best Buy yesterday, Bed Bath & Beyond. This is the first real major store closing that we've heard of. Bed Bath & Beyond today laying off 20% of its workforce, 150 stores. We'll see. It's not a trend yet. But, boys, it sure looked like it's getting there. 800-951-0592. God bless everybody, and we'll be back tomorrow.